All right, welcome to today's Coffee with Markus. And as always, we will talk about what's happening in the markets today. And oh boy, what a day! We will take a look at this. But this will only take us 2 minutes or so. And then we will talk about how to use delta when trading options. And I'll show you something really, really cool. We're actually going to talk about the probability feature. Anyhow, you don't want to miss this. Then we will talk about my current trades. I'll show you the trades that I did thus far and what I expect to happen tomorrow and for the remainder of the day. And of course, then as always, we have our question and answer session. So put your questions in the comments and let's get started. We have a full program, so let's get cracking here.
This show is about real money and real trades. I'll show you the trading strategies that I personally trade, the tools that I use to trade my own accounts, and we will talk about the right mindset of a trader. Now, talking about mindset, I'm going to show you how to create SRC profits. And SRC stands for systematic, repeatable, and consistent, because that is the key to long-term success in the markets. So, if you are sick of all the hype and empty promises, and you want to learn trading strategies that actually work, then click on like right now and let's get started.
All right, cool. Let's get started and let's take a look at what's happening in the markets right now. And wow, after 4 days higher, today the S&P is down. And I mean, it's down significantly, down more than 2%. But what's really dragging everything down is the Nasdaq. The Nasdaq now down more than 3%. That is a lot. So what is happening? I mean, everything seemed to be good. And then suddenly a day like this where we are down more than 3%, well, let's blame it on Facebook. Facebook reported earnings yesterday after the bell, and it was way worse than expected, especially since they had their first quarter in their history where they had shrinking users. And we're talking about the so-called DAU, the daily active users. As you can see, Facebook down 27%. And with Facebook down, I mean, this is where also we have Snapchat going down another 24% here. We have other social media platforms like Pinterest down 11%, 10.5%. We have Twitter down, 5.5%. And you see, this is what's weighing heavy on the Nasdaq. And I mean, at first it looked like, if you're switching to a 5-minute chart of Facebook here, that you see, at first Facebook came back, staged a little bit of a comeback here. Let me just show you here what happened since the beginning of the day. But then pretty much after the first hour of trading, it has been sliding. Looking at the Nasdaq here, very similar picture. So the Nasdaq, we closed yesterday here, this morning we opened here, tried to push a little bit higher, but then boom, all the way down. So, I mean, how do you trade these crazy markets and what does it mean for my positions that I'm in? That's what we're going to talk about in just a little bit. But, first, let's talk about something super important for options trading. We'll talk about delta in options trading. And let me just switch something over here because this is where I want to go onto my handy-dandy iPad and handy-dandy notebook and actually take a few notes. All right, so let's talk about how to use delta in options trading like a pro. You see, many people find these Greeks like delta to be one of the more confusing concepts when learning about options. However, as you will see in just a moment, it's important to understand delta if you want to make successful trades. And in this video, I will explain delta in detail and show exactly how to use it to your advantage. So specifically, today we'll talk about what is delta? We'll talk about understanding delta. We'll talk about delta, and this is a super cool feature, the probability ITM feature. And you might know about this, you might not, and you don't want to miss this. And then I'll show you how I use delta to apply it to decision making, specifically when trading options with the PowerX strategy and the wheel strategy. So we'll take a look at many examples here. Okay, so but let's first talk about what is the delta. So first of all, the delta ranges for calls from 0 to 1 and basically measures how much does the price of an option change if the stock changes by $1. So as an example, if we have a delta of 0.6 for an option, it means that the option goes up or down 60 cents for each dollar that the underlying moves. And the underlying can be a stock, can be an ETF. You get the idea here, right? So that the underlying, let's just make this complete and say moves. Now for puts, this is where it goes from -1 to 0. And it's the same. How much does it rise or fall, the price of an option, if the underlying moves by $1? So just long story short, with the delta of 1, it means that the price of the option moves $1 for each dollar that the underlying moves. So you get the idea, right? So let's actually take a look at an example here. So we want to take a look at an options chain here, and we want to take a look at Apple. So here we have an option chain as Apple. I'll zoom in. So as you can see right now, Apple is trading at 174.26. And on the left-hand side, we have calls. On the right-hand side, we have puts. Now, let's say that we are buying a call that is at the money. So let's say at 175. Let me zoom in a little bit so that we can see it better. Right here, now you see that the delta for the 175 here is 0.468. So this means for every dollar that Apple moves, the price of this option moves around 47 cents. So right now, this option is trading at, you see the last traded here is 78 cents. So if Apple would move from 174.12 to 175.12, we can expect this option to move up by 47 cents. So to around, $1.20 something. You get the idea here. Now, for puts, it is the same way. So if you're looking at the 175 put, and we're looking at the delta, it has a delta here of negative minus 0.532. So this means that if Apple moves down by $1, it means that here the option will increase in price from right now $1.88 to then by 53 cents. So all of this is cool and handy and dandy, and you might wonder, why do I need this? Why does this really matter? Well, there's another use of delta that not many traders know about. And this is what I said here as we are heading back over here. It is the probability ITM feature. So let's talk about this, okay? So not only does the delta tell you how much the price of an option will change when the stock price moves by $1, it also tells you the probability of the option that you're looking at of being in the money. What? So it shows you the probability of the option being ITM, in the money. So let me just show you a really, really cool example. So let's take a look at the charts. Let's go to a daily chart, and let's take a look at Apple. Oops, AAPL is the symbol. There we go. So let's just say that you are bullish on Apple, and you're wondering, is it possible for Apple to move up to 185? Let's just put a horizontal line here, right there. And you want to know, what is the probability that Apple moves to 185? Well, this, as you know, options have certain expiration dates. So let's just take a look at the expiration date of, let's say, tomorrow is a little bit short-lived. So let's say next week. And so now we want to see what is the delta. What is the delta of the 185 call option? And you see the delta of the 185 call option for next week. So this is where we have how many days to expiration? Yeah, probably 8 days to expiration. You see that this is 0.061. And what does this mean? It means that the probability that Apple will move up there and that this option is in the money, meaning that Apple moves above 185, is 6.1%. What do you think about that? So this is where you can say, okay, let's just actually see if we can put some text in there. Okay, so probability, that's not how you spell probability, probability. You get the idea of Apple moving above 185 in 1 week is, as you have seen, 6.1%. And we correct this to moving. Now let's see what is the probability if you give Apple 2 weeks? So tomorrow in 2 weeks to expiration. Let's take a look at this. And this is where right now we will go to next week's expiration, and we're looking at the 185, and we see that the probability, the delta, went up to 13.9, 1.39. So it means that there's a 14% probability that within 2 weeks, Apple is moving above 185. What do you think about this? Is this cool? So let's also take a look at the on the other extreme here. Let's say we want to know how likely is it for Apple to move below 155 within the next 2 weeks. And this is where you see the probabilities here. We are looking at 155, and now we need to take a look at the put, right? And we're looking at the delta, and the probability is 0.44. This means 4.4%. So let's take a look at this, and this means that the probability of Apple moving below 155 in 2 weeks is only, what did we say? How much is it? Let's go back here and check. It's only 4.4%. Okay, let's write this down. 4.4%. Now, keep in mind that this delta changes all the time. As the stock moves, you will see it on your option chain that this delta changes every few minutes. It really depends on your broker. Some brokers calculating it in real time. Most brokers are calculating it every few minutes, which is absolutely fine. But this way you have a probability of how likely is it for Apple to go up or to stay in between this, because you can now calculate the probabilities, right? So here we had it for 2 weeks. It was around 14%. Okay, so you remember it was around 13.9. Let's just say 14%. So if we are looking at this, then we know that the probabilities of moving above is 14%, below it's 4.4%. So this means the probability of Apple being in this range for the next 2 weeks, as of today, is 80%, right? You get the idea. So I think that this is super cool, and you see very, very few traders know about this. So now the next question is, if you're going back here to our handy dandy notepad, is how do you use this to your example? How do you use this for your decision making? And you see, this is where let's just keep it simple. So let's keep it simple. So generally, here's the idea. When you're buying options, obviously you want the option to end up in the money. So, because otherwise it expires worthless. Now, on the other hand, when selling options and you're collecting premium, right, then you want the option not to end up in the money, because this way it will just expire worthless and you keep the premium. So you now get the idea of how I like to use it. So for example, the delta when buying options, I like to see it at least 0.5, 0.45, something like this. Okay, and this is when I'm using the PowerX strategy. So let me show you a very specific trade that we did today, or yesterday actually. So let me quickly log in here to show you the trade that we took, and we're going to the PowerX analyzer. Now, this is a trade that I took yesterday. I actually traded the stock. So this is IRM, Iron Mountain. I entered at 46.35. Here is my first profit target. This is my second profit target. And here's my stop loss. So as you can see today, the stock is just slightly down, but we're still trading around our entry price. Now, instead of buying the stock outright, you could actually buy an option. And this is what we are looking at. So for example, for the quick trades, we have two possibilities. We can trade an at the money option or an in the money option. Now, if you have PowerX Optimizer, you might have seen this little show options Greeks here. And this little option Greeks shows you actually the delta of these two options, right? So this means if you are buying 5 ATM options here, that with every dollar that the stock, IRM stock, moves higher, the option is moving higher by 41 cents approximately. And this is how we can calculate how much the option will be worth when the stock hits the profit target or when the stock hits the stop loss. So you see, we also have another possibility of buying the ITM option, and here it has a delta of 61%. So for every dollar that the stock moves higher, the option makes 60%. Now also, how likely is it that the stock will stay above 45? Well, that is a 61% probability as of today. You get the idea. So this is why when buying options, we want to use a delta of around 0.5. You see, I'm willing to go as low as 0.4 here. You get the idea. Now, on the other hand, let's talk about how to use this when trading the wheel. So the delta when selling options, okay, this is where you want to go for a low delta, because the idea is that you have a low probability of this option being in the money, because this means that now you would have to buy the stock. So this is where it makes sense to look for something that is 0.2 or less, because this means a 20% probability of being in the money, which on the other hand obviously means an 80% probability of expiring worthless. And this is what we look for the wheel strategy. So let's see if we can jump to the markets right now to find a live example here. And I just want to see if a little bit earlier I was looking at DKS. So let's do this. So Dick's Sporting Goods, right? So Dick's Sporting Goods, PowerX Optimizer suggests us a strike price of 104. Not ideal. This is why I didn't flag it as green, why I flagged it here as possible. I would like to see a strike price of closer to 100, to our lowest low calculator, but you already get the idea. So if we would sell this today, and it has an expiration of February 11th, so based on today's date, that is 8 days to expiration. So it means that in order to get in the money, this stock could drop another 7%. But this is where it's kind of useless to know, okay, so what? It drops another 7%. You see, if you go for another one, MU, for example, yeah, it can also drop 7-8%. Let's see, UIL, that can drop 7%. Okay, so here are the examples. Let's maybe take a look at WIN. This could drop 9%. But here's what's more important, right? I mean, this is where we look at the delta. And the delta, as you can see, is 0.13. What does it mean? It means that the probability as of today that DKS will close below 104 in the next 2 weeks is only 13%. So this means that you have an 87% probability of this option expiring worthless. Now, again, keep in mind what I just told you. This is subject to change every single day. So as the stock price gets closer to the strike price, the probability might be higher. But it's one of the things that some people like to keep an eye on when trading options. So this is where we go back to the practical applications, right? How to use it. Well, I only wanted to put this down there. So let me just copy it and paste it, right? And so this is where some people, let's actually do it here, applying delta to the decision making. This is where some people use delta to determine when do they roll, right? So if you want to avoid assignment and you want to roll an option, this is where you could look at delta. And you could, for example, say, as an example, if the delta is bigger than 0.3, you consider rolling an option to avoid assignment, right? And you could say there's one possible strategy, and you could say if the delta is still below 0.3, right, you don't do anything. So again, full disclosure, this is not what I'm doing because I like to get assigned to according to the wheel strategy. But as you see, when looking for options here to enter, you will often see whether we're looking here at DKS or we are looking at UAL, where the delta is 0.14, or we are looking at WIN, whether delta is 0.13 or 0.15. I like to see it here below 0.2. So, as you can see, delta is really fascinating if you know what it means. And most people just know that delta is actually telling you the price, how much an option move for each dollar that the stock moves. But this probability ITM feature is, I think, something very cool when it comes to delta in options that I don't know, maybe you have known it, maybe you did not know this. If you didn't know this and you think that others should know about it, feel free to share this video and give it a like. I also have some other videos popping up that you might enjoy, so take a look at these and I'll see you in the next video. All right, you get the idea. We're still here. Yes, we will talk about your questions. So we'll take a look at these and we'll take a look at my positions here. So, but is this helpful at all, that you get a better idea of what this delta is? And I'm just curious, if you already knew what that meant, just click on like. This way I get a gauge here of what's happening and how experienced you are here as options traders. Okay, so let's take a quick look here at your comments and questions, and then we'll take a look at my positions that I have here. And yeah, I see that everybody here is, well, many of you are, yeah, stuck in this cold front here. Be safe, right? I mean, in Texas, I mean, in Austin, they canceled schools today and tomorrow because of the ice. Because in Austin, Texas, we do not know how to drive on ice. So when we have ice, we want to close the schools to keep everybody safe here. Anyhow, so good to see. And there's Tim who said, I ran a rescue on app, so we can take a look at this here. And yeah, 1969 TX Cowboys, stay warm. Yeah, frozen Dallas. Exactly. We shall see. Okay, I just want to quickly see if there were any follow-up questions here for the delta, and then we will actually take a look at some of the positions. And yes, I did get a fill on Tasty Trade. I'll tell you exactly what I did there in a moment. And yeah, Michael, exactly. Facebook is stinging up the markets. It's so surprising, right? And when Facebook sneezes, I mean, all the other social media are getting a cold. I believe even Google is affected. That really had super earnings yesterday, but it seems that the markets don't like what Facebook had to respond here. And David says, yeah, the tricky thing with the delta is that it will move when the stock moves too. That's exactly. So if you have a delta strategy, or for example, if you're watching the delta, you kind of have to watch it every day. If you have dramatic moves like today in Facebook, you have to even watch it intraday here. Good, good, good. The handy dandy notepad. Haven't heard that since I was in preschool. Yeah. Yeah, Nazi says, you see, there's another strategy, the so-called 10 delta strangles. So what does it mean? It basically means, let's just go back to Apple here. So that's a good point. So some people like to sell these delta 10 strangles. And what does it mean? It means that we are selling a call that has a delta of 0.1, meaning that there's a 90% probability that the stock stays below, and we're selling a put that has a delta of 0.1. That's exactly. So this is one possible application here for this delta concept. And progressive trading, this is a great question. Don't you like to buy options out of the money sometimes? I do not. For me personally, I like to buy ATM, so at the money options, and ITM, in the money options, just because they have a higher probability of keeping their value. So with OTM options, out of the money options, you have a possibility to make a lot of money, but usually you need a quite big move. So it's great if you have very volatile stocks. For most stocks, the probabilities are against you. So yeah, anyhow. Yeah, now the point is also, I mean, the higher the delta for calls, right? The more expensive the option. Let me just show you this example here. Again, if we are going back over to the PowerX optimizer, and you see a call, for example, with the strike price of 47.50 that has a delta, let me just show the options Greeks here, that has a delta of 0.4, costs only $1.40. This other one here that has a strike price of 45, so one strike lower with a delta of 0.6, is way more expensive. So here it's more than twice as expensive. But you see, therefore, it also doesn't lose its value that fast. So there's pros and cons, and what I like to do when trading options with the PowerX optimizer, according to the PowerX strategy, I look just for the one that has the highest risk and reward. What does it mean? The risk means that you're risking $1 and you're trying to make $6.35. So what would you rather do? Risk $1 to try to make $6.35, or risk $1 trying to make $4.58, right? Here, obviously, with the same risk, you try to make more money. So therefore, in this particular example, the ATM makes more sense. Anyhow, good. Travel Trader Club, helpful information, very cool. So it says, doesn't delta only approximate the probability of being in the money outside of the range? It's not a good approximation. It's pretty good for all of this. However, so let's just take a look at another example here, because it's a great question. Let's take a look at Apple again, and I just want to show more strike prices so that we see a delta. So you see here at the 145, we have a delta of 1. And this is for an expiration in 2 weeks from now. So right now, the probability of Apple staying above 145 is 100%. But this does not mean that it is a certainty, because if Apple drops significantly tomorrow, this delta might change to 0.98 or 0.97. So you need to keep this in mind, and this is probably at what you're referring to. It could be that delta is more predictive for a few more days if you are going for a lower one. Anyhow, if you are trading strategies that are depending on delta, you have to watch it pretty much every day here. Cool. All right, good. SJ saying, for new trader, it's helpful to understand. Yeah, only but watch a couple of more times at a slower speed. I heard that most people are watching these videos at a higher speed. So we shall see. Okay, so let's actually, because I see that Francois is asking, I think about rolling your ADI now that it is in the money. So let's talk about a few trades that I'm in right now and a few trades that I have been taking this week. So let's actually jump back here and let's take a look at the two portfolios. So let's actually start with the Tastyworks account, where I currently have 3 trades that I'm still unwinding. So ARGF is one of them. And I said that with ARGF, I'm not yet planning a rescue mission. What I want to see is that we found a bottom. And so this morning in the mastermind, we talked about it a little bit more, how exactly identify that it has now found at least a temporary bottom. And for me, this has not found a bottom yet. So therefore, no rescue missions on this one just yet. LVS, it's a really cool one. So this is where I did a so-called arch trade. Let me just reset the chart. And my cost basis here is at 46.86. My break even, I believe it's at 44, so somewhere around here. And what I did at some point that I bought, can't remember, I think I bought the 39 call and I sold 43 calls. Now the 43 calls expiring tomorrow, if LVS stays above 43, they would actually, I would get called away. Now I did not sell it for my whole position. I only did it for 1,000 out of the 3,600 shares that I have here. And since I bought these 1,000 shares at 35, if I'm getting called away at 43, that's a nice chunky $8,000. However, this is where I thought today it would make sense to roll this out. And I want to show you exactly what I did there. And let's go to the calculator so that I show you LVS. So the idea was that here I had the 43 strike, and this is where I said, these shares don't make sense. It's so for these strike, it's 1,000, right? And the purchase price for these 1,000 was at $35, right? Because I flew a rescue mission there. If you're not quite familiar with rescue missions, I'll link to a video in the description here so that you can take a look at this. Anyhow, this is where I said, okay, let's see if we can roll it for next week for 65 cents. And this is what I was looking for. So for 65 cents, I actually did that and rolled my calls that are expiring. Let's see, the strike price is 43, not 32, 43. So that I rolled these for next week. By doing so, I got another $650 in premium, right? And so now, as long as we are staying in this range, I just can keep rolling it. And I've been rolling this particular option here quite a few times and always collected between $500 and $700. And if I can keep collecting on this just one here, $500 to $700 per week, I'll just keep doing this until LVS gets to a point where I say, I want to just get rid of all of the shares that I have here. Is this making sense? So this is the diddling that you heard earlier. This is where I rolled and I got filled going into the close because right now the market's just closed and I got filled probably like 15 minutes before the bell. So right. As you know, this is another position that I'm in. So no tricks there. This is where I'm just waiting and holding and see if you can get out of the basement here. So we had a good run over the past few days. We're above 3 and now pulling back. I must say though, if the whole Nasdaq is pulling down, look at this, we finished down 3.8%. I mean, for a stock like Ride being down 4.1%, that's actually hanging in there pretty good. Okay, so let's talk about a few others here. So ADI, this is where I got assigned at 162.50. So I sold puts and then I got assigned at 162.50. So now I have some shares of ADI. And this is where I want to show you what I did this week thus far. So let's go back here and let's take a look at the activity from 131. So as you can see with ADI, let me zoom in so that you can see it a little bit better. So I own 600 shares of ADI, and this is where I sold the 162 call for $1.55, and I sold 6 of them, and this gave me a premium of $930. So looking at this chart, here's what happened. I already collected some nice put premium here. If ADI tomorrow on Friday, when this option expires, is above 162.50, because that is exactly, as you can see here, the strike price that I sold, I'm getting called away. I'm making $0 on the stock because I bought it for 162.50 and I'm selling it for 162.50. But I'm collecting some very nice premium here on ADI. So let's see, what else do we have? We have Caterpillar. Caterpillar, I sold the 192.50 put. I did that last week. And what I like to do is when I see that 90% of my max profits are achieved, I like to close it. And this is what I basically did here. So as you can see, this trade, I actually closed yesterday already. What is today? The 3rd. Yeah, I closed it yesterday already. So I sold Caterpillar. I believe that I did this on the 28th. Yeah. See, I sold it for, no, where's Caterpillar? There, for $1.72. So I sold it for $1.72 and then I bought it back for just 10 cents. So this is actually, yeah, this was a nice profit here. So I closed this one just to free up some buying power and to have another position there. All right, let's take a look at some other trades here. CLF, another one. So I got assigned at 20 right here. So I have quite a few shares. You get the idea. This is supposed to be the 20 line here. And this is where when did I do this? Yesterday. I have 5,000 shares. So I sold 50 of the 20 call expiring next week. So expiring next week for 35 cents. So this gave me around $1,750. You see a little bit of the OCC fees and the NFA fees are being subtracted here. So leaving me with $1,746 net. And here now the question is, okay, what will CLF do? If it stays below 20 by next week, I can sell more calls, collecting more premium. If it moves above, I'm getting called away. I'm not making any money on the stock, but I'm keeping all the premium that I have from selling puts and also from selling calls here. IWM didn't do anything this week. I got assigned at 205. There was an opportunity, when was it? Like 2 days ago, I believe. It was just that this happened in the afternoon, and usually I'm not in front of my computer. I like to live live, and so I like to trade in the morning. So didn't sell anything there. Thought that we had another opportunity. So anyhow, with IWM, could have probably sold it. I think many of our mastermind members did. I chose not to, which is fine. So, but then we have JPM. So for JP Morgan, I got assigned at 149. So let me show it to you here. So boom, right here. And JP Morgan this week, I was able to sell the 150 call. So this will be very, very interesting. For this, I got around $720 here. And I sold 8 of those. So as I said, I got assigned at 100. Oops, there we go, 149. So if it moves above 150, I'm not getting called away. I will make $100 for each option that I sold here, in addition to the premium that I have received. So in addition to the $820, I will, for these 8 options, receive an additional $800. Now we will see, today is February 3rd. Tomorrow will be February 4th. So if JPM can rally above 150, and we never know, you see, today, what was the high of the day today? The high of the day today was 151.65. So it could absolutely close above this. Then I will collect an additional $800. If it stays below 150, I can just sell more premium. So this is basically the positions that I have right now. This is what's going on. And as you can see, this week has been a pretty good week. So I was able to sell the CLF calls. That's 750 plus 700. That's $2,500 plus $900. It's like $3,400 that I collected in premium thus far. Can't complain. My goal is usually to collect around $3,500 per week. So with $3,400, I'm super, super close. And the week is not over just yet. So we have another trading day tomorrow. Let's see what the markets will do tomorrow. What is happening there? Okay. So Michael says, I will use delta with every wheel put and call trades. The OTM percentage. Yeah, and absolutely. Tim said also, some use delta to balance their portfolios, because here's the deal. If you can achieve in your portfolio a delta of 0, it means that you're so-called delta neutral. We haven't talked about that yet, but delta neutral means that your portfolio will not move if the market goes up or down. It remains neutral, right? Which usually means that you have some long positions and short positions, or that you have some calls or puts. So this is if you don't want to be dependent on the market directions, you try to have a delta neutral portfolio. However, since delta changes every day, you have to adjust your portfolio quite quickly. Anyhow, so yeah, good point, Tim. That's exactly. All right, cool. So good to see everybody here. I mean, it's always great to see all the mastermind members chiming in here. Des, good to see you. Hey, there's Ed. Good to see you. Marge, stay warm, stay safe, stay healthy. Sabina from cold Frankfurt. Anyhow, good. All right. So Dan said, Amazon, what? Post-market up 9%. Let's take a quick look at this, because Amazon was reporting earnings, or is reporting earnings after the bell. So AMZN is up. Holy cannoli, look at this. 12%. Usually this should help actually the NASDAQ. So let's see what is happening here. We're going to the NASDAQ futures. Look at this. Yes, a huge jump here. Let's actually measure this so that we get an idea. So Amazon reporting better than expected earnings. Whoa! This here, ladies and gentlemen, is a 1.5% move. So in after our trading, the NASDAQ moved higher by 1.5%, pulling back right now. So we'll see what happens when the dust settles tomorrow. But yeah, then good point, plus 9% and going higher. All right. So Jim says, but rolling LVS, you must be closing your current call for a loss and opening a new one for a gain further in time. That is correct. So I'm rolling it to a week out, and I'm rolled it for the 65 cents credit. So Jim, just to be absolutely clear, yes, you're absolutely 100 million% right. So what I did is I bought back the 43 call that is expiring tomorrow on February 4th, and I sold the one for next week. So I kept the same strike price. I just rolled it out by a week, and by doing so, the difference between selling and buying, or the other way around, buying it back and then selling, was 65 cents. And again, I did this on 10 contracts, and therefore it's $650 for a week. So yeah, absolutely, you are right. Good. Rolling LVS, closing the current call. That's what I did. All right. Good, good, good. Hey, Marcin from Poland. Did you know that I used to live in Poland? Between 1996 and 1999, I lived in Warsaw, Poland for 3 years. At that time, I actually learned a little bit of Polish. I don't remember much. I mean, this was 1999, but yeah, it was fascinating, especially at this time. You see, this is where Poland was really just yeah, bursting and developing, and it was a really cool time there. Anyhow, Martin, I don't know. How do you get there? Oh, because you're from Poland. Yeah. So Alan says, yeah, Amazon up 50% after hours. Does look like a good report. So we shall see. Yeah, all of my tech stocks up 2% after the announcement. We can take another look at this because it's really fascinating to watch the markets after hours. So if we take a look at Amazon, so let's see, we are still up 12%. So related tech stocks, probably, let's just talk about the big one. Let's see if Facebook in after hours trading, all right, look at this, bounced back 1%. So we can probably also take a look at Apple here, up 4.6%, maybe Google, so that's good, 1.6%. Yeah, it seems that right now, all of the tech stocks, and this is why the NASDAQ in after hours trading here, looking at the NASDAQ, is jumping higher here on a 5-minute chart. Yeah. Good, good, good. We shall see. Okay, so 1969 says, how do you decide if you should sell your calls at the assignment price or above it? You see, this is where I like to use the calculator. Let me show it to you because I want to see that I can get at least 30%. And let me just show you. So for example, for ADI, well, this is no longer accurate because let me just show you here on LVS. So let's say I could have rolled up for maybe next week to the 44, right? And that this only would have gotten me maybe 10 cents or something like this. So on the option, I would only make $100, and this is 12% annualized. However, on the stock, I'm now making an additional $100 per option that I sold. So this would be, instead of making only $8,000 on the shares, it would now be $9,000. So this is kind of where you have to decide. It's a great question, right? The bird in the hand versus a few of them in the bush. Yeah, what do you prefer doing? And often it helps really looking at the chart and saying, okay, let's just look at the chart here, at a daily chart of LVS, and say, what is more likely for LVS to do, right? I mean, is it more likely for LVS to stay above 43 or 44, 45? And this is where it goes back to when I looked at JP Morgan, right, where I got assigned at 149 and I sold the 150, right? Because you see, it's very, very easy for JP Morgan to go above 150. So this is where it makes sense. But that's a great question. All right, cool. This is where it really helps. It really helps to look at the calculator and see, okay, how much would you make on the option? How much would you make on the stock, right? And this is where I said, for example, for ADI and CLF, I would not make anything on the stock, but I collected a lot of premium, as you can see here. So this was a lot of premium to collect, like $1,750. If I would have gone to the 21 call, I would probably have collected half of this, maybe even less. And this is where, again, do I want to have $1,700 right now? Or do I want to have, let's say, $700 and more money if the stock moves higher? And this is where, again, you're going back to CLF, take a look at this on the chart and say, okay, how likely is it that this goes up to 20 again, or 21, right? This is where we said. And this is where I said, yeah, you know what, let's be a little bit conservative here as this moves higher. Because again, this here expires next week. So I still have a possibility of rolling it up. I could absolutely do this. Okay, anyhow, great question. Is this helpful? Who asked this? 1969 TX Cowboy? All right. Good, good, good. Yeah, clarity in the calculator. So in the calculator, when you're rolling, you're always putting in the net premium. Not what you get for selling it, but the difference between buying and selling. Cool. All right. Holy. So, Okay, Larry said, Larry, good to see you here. Snap reported. Okay, let's see. Let's jump over and see what is happening here with Snapchat. And Snapchat, oh, look at this, up 33%. Okay, Amazon up more than 12%. Snap more than 33%. That's big. I mean, is this helping Facebook? No, not really. Is this helping the NASDAQ? Let's just quickly see. We're switching to a 5-minute chart here. Oh, yeah. I mean, again, you got to see that this move, it looks so harmless on a 5-minute chart. But if you go from this low to this high, I mean, this is from the low to this high, it's a 2% move. That's a lot. I mean, considering that the NASDAQ was down 3.7% today, that's a big move. And right now, in after hours trading, still rising. So, yes, Facebook, disappointing, but Amazon, Snapchat, good stuff. Anyhow, all right. Hey, time flies when you're having fun. Has this been helpful to learn a little bit more about Delta and also to see what trades I'm taking, why I'm taking them, and to answer your questions? If this has been helpful, do me a favor and click like, and feel free to share this video, I don't know, by email, by social media, by whatever, with everybody who you think might benefit from this. Okay. I'll see you back tomorrow morning with the stock market update, and then next week, live from Cancun, Mexico, with another Coffee with Markus. And I'll explain more next week of why live from Cancun, Mexico. Anyhow, have a great rest of your day, and I'll see you in the next video. Take care.